Hi and welcome. Are you an ICANN student or a student pursuing other professional accounting certifications or a seasoned accountant looking to sharpen your skills? This video is designed just for you. In this session, we are diving into the art of statement of financial position analysis, a cornerstone financial statement evaluation tailored just for you. We'll explore the critical questions, the techniques, and the insights that distinguish a strong financial position from a weak one. Beyond just passing exams, this knowledge will equip you to make impactful decisions in real-world scenarios, whether you're working in auditing, finance, or corporate management. These skills are essential. So grab your pen, your calculator, and a sharp mind. Let's decode the statement of financial position like a pro. Let's take a deep dive into this as I share my screen, which is our usual custom, and let's look at the study text on the statement of financial position analysis. All right, I've gone mini-me now. I believe you can see the study text or the material on the screen, and let's understand this SFP analysis together. So in developing another component of detailed financial statement analysis, the key issues in statement of financial position analysis are to assess a business financial position. We have to consider the quality of its assets and liabilities and conclude on whether the statement of financial position is strong or is weak. So, having looked at the income statement analysis, initial and detailed, and also the statement of changes in equity, the statement of financial position is the next financial document or statement to look at. And the quality of the assets, liabilities, and the capital structure is key, determining a strong or a weak SFP. As well as calculating the usual ratios against relevant income statement components, number of days in sales, in receivables, how many times sales covers components like accounts receivables, how many times cost of sales or credit purchases covers accounts payable, and other types of ratios. The important aspects of the detailed statement of financial position analysis concern the financial position, the content, in value and in volume, the structure, and the stability of the SFP. This is very important. So the content and the value of those asset lines, liability, obligations, and the capital structure is key. How stable are these figures and the amounts in this asset class, liability areas, and the capital structure? The main questions to be considered and answered, if possible, are do the statement of financial position quadrants of non-current assets and long-term funding appear balanced? Very, very important. So when you look at the non-current assets and the long-term funding investment in those assets, are they balanced? Key question to ask. Also note the quadrant analysis can easily identify if the non-current assets are being funded by current liabilities, which is an anomaly. So short-term credit are not to be used to finance fixed assets or non-current assets because these are long-term investments. So long-term credit or investments are supposed to be used for this. So please take note of the quadrant analysis. Very, very important. What is the quality of the non-current assets? Is the next question in your analysis. Largely tangible such as equipment or buildings, land with clear market value or mostly intangible such as goodwill, patents, copyrights. Can this be sold in a crisis? Questions, important question you should ask. What might be an independent market value of these items? Key question. Does the majority of the long-term funding comprise share capital, retained earnings, or is it mainly long-term debt and therefore it's very more risky? So, what's the value of the share capital, retained earnings? Are there preference shares? The liability area? What are the debts the company owes in terms of funding? Interest expense in the SCI, the income statement. So, is it mainly long-term debt, which is risky? So you look at the risk element in the S&P. Is the statement of financial position debt soft, that is director's loan, or hard external funding with a high rate of interest? So is debt soft financial statement is the directors or the owners of the business have provided equity or funds to drive. So it's a soft financial statement. But where is hard, majority or above 50% of the funding is external. And this culminates in high rate of interest and a short redemption rate. When is the due date of repayment of this debt and the interest? Key questions. So the soft and the hard S&P is a quick question you should ask. Does the business have the funds and can it generate the funds necessary for repayment? This analysis should be followed up in the cash flow statement analysis. Very, very important. So another question is, does the financial or statement of financial position quadrant of current assets and current liabilities are well balanced? Does the current asset cover the current liabilities? If not, will you consider this to be appropriate given the nature of the business? And looking at liquidity risks, current assets and the current liabilities measure how working capital on a day-to-day basis is seamlessly run. So do you consider it appropriate? So these questions are very, very, very important. Note, the quadrant analysis can easily identify if current assets and current liabilities, which is short-term credit, are roughly equal, or whether the business is overloaded with short-term debt. So where they are all roughly equal, maybe you are carrying out or doing ratio analysis to check the current ratio, where is 1:1, then the short-term credit is currently overloaded. That can easily be concluded. What is the quality of the current assets and how liquid are they? They comprise mainly of inventory and slow paying accounts receivable. How many days does it take to recoup the account receivables? Or is a sufficient quantity of cash or near cash available? Critical questions. Are the current liabilities softer in terms of trade payables and accruals, or harder, bank overdrafts that have interest and non-negotiable liabilities for items such as taxes, deferred taxes, including VAT items, payroll, social charges, and company income taxes? So determining the hard or softer liabilities will help you comprehensively understand the working capital management structure. The above list of questions will enable a structured analysis of the components of the statement of financial position from the pre-scene. Very, very important. So you have two documents provided, the pre-scene and the unseen. So from the statements or the components of the financials presented in the pre-scene, these questions will help you in your analysis, make you understand the financial story and the big picture very, very clearly. This is very important. So the analysis should be expanded to include the notes to the accounts where more details are given. So you have the revenue figure. So check the notes for the revenue components. So you have the statement, the assets, check the notes to expand the components of the asset, the acquisition, and what are the financial policies, what are the wider context or the explanations to them aside the snapshots on the balance sheet. So this is very important that this is carried out to be able to give you a broader overview of the statement of financial position analysis. This is very, very important. And that wraps up our deep dive into statement of financial position analysis. Remember, this isn't just exam knowledge. It's a toolkit for navigating the complex financial landscape you encounter in your career. Thank you for watching. Don't forget to like, share, and subscribe for more valuable content tailored for ICANN, other professional certifications, aspiring students, and for finance professionals. Let's continue building your expertise and empowering your financial future. Keep excelling and stay financially savvy. See you in the next video. And until then, bye for now.